Welcome to Furniture Industry News for September 14th, 2023, where you can stay up to date on the latest news surrounding the ever-evolving furniture industry. In today's episode, we'll cover the decline in furniture and home furnishing sales, shareholder concerns regarding mismanagement at Sleep Number, Surya's acquisition of RST Brands to expand their product portfolio, and the consecutive fall in container spot rates. In August, the furniture and home furnishings industry saw a decline in sales, excluding gas stations. According to the Department of Commerce's advanced monthly estimates, the category experienced a sharp year-over-year sales decline of 7.8%. This means that furniture and home furnishing stores generated an estimated adjusted $10.932 billion in sales compared to $11.861 billion in August 2022. The category also dropped a full point compared to July's adjusted sales of $11.042 billion. Looking at the bigger picture, furniture and home furnishing sales for the year have fallen short by 4.3% when compared to the first 8 months of 2022, amounting to $88.957 billion in sales. On the other hand, the retail and food services industry as a whole fared better in August. It recorded an adjusted $697.57 billion in sales, representing a 2.5% gain year over year compared to August 2022. Additionally, there was a 0.6% increase compared to July's adjusted sales. When examining specific sectors, gas stations experienced a significant decline of 10.3% year over year in August. Other sectors that faced notable declines include building material, garden equipment and supplies dealers, down 4.9%, electronics and appliance stores, down 1.8%, and sporting goods, hobby, musical instrument, and bookstores, down 1.4%. On the positive side, some sectors showed strong year-over-year growth. This includes food services and drinking places, 8.5%, health and personal care stores, 7.8%, non-store retailers, 7.2%, and motor vehicle and parts dealers, 4.4%. It's worth noting that the Department of Commerce's advance estimates are based on a subsample of the U.S. Census Bureau's full retail and food services sample. This sampling method involves selecting around 5,500 retail and food services firms, which are then weighted and benchmarked to represent more than 3 million retail and food services firms. Sleep Number, the home furnishings company, has found itself in the middle of some shareholder drama. Stadium Capital Management, which owns about 9% of Sleep Number's shares, is not too pleased with the way things are being managed. They sent a letter to the company asking for a change in the board membership. Stadium Capital is accusing the board of having a questionable transformation strategy, making some capital allocation missteps, and just not being great at execution and financial planning. In response, Sleep Number is saying, "We've been in discussions with Stadium Capital to understand their perspective, and we're going to keep those conversations going." They've moved quickly to put together a proposal that shows they've heard Stadium Capital's concerns and are willing to let investors help select a new independent board member. Sleep Number isn't the first company in this space to face these shareholder challenges. Purple Innovation went through something similar with Coliseum Capital, and they eventually reached an agreement after 7 months. It will be interesting to see how this all plays out for Sleep Number. There's some exciting news coming out of Cartersville, Georgia. Surya has just completed the acquisition of RST Brands, an outdoor furniture company based in Salt Lake City. With this strategic move, Surya is not only gaining market share, but also strengthening its capabilities in the rapidly growing outdoor furnishing segment. Terms of the acquisition were not disclosed. Surya President Satya Tiwari couldn't be happier about the latest addition to their family. He said, "We are thrilled to bring the RST Brands team and business into the Surya family and look forward to the future growth opportunities we will pursue together." And it's not just empty words. Surya has big plans to become the go-to resource for home furnishings. By combining their strengths, both companies can now accelerate this mission and cater to every lifestyle. Surya has been expanding its product portfolio over the past 10 years, and this acquisition is just another step in that direction. With RST Brands on board, Surya can now offer a wider assortment of outdoor products, including rugs, textiles, accents, and furniture, catering to customers at every price point. And this is not the first time Surya has made strategic moves. Earlier this year, they acquired Global Views, showing their commitment to growth and innovation. Spot container rates have been on a bit of a roller coaster lately. After 6 weeks of continuous increases, they have now fallen for 4 weeks straight. This week, spot rates overall took a hit, dropping by 7.1%. Let's break it down further. Spot rates from Shanghai to Los Angeles fell by 4% to $2,162, and Shanghai to New York saw a more significant dip of 11%, down to $3,032. If we look at the bigger picture, over the past 4 weeks, spot rates have fallen approximately 12%. They're down 68.4% compared to the same week last year, even though spot rates are 85% lower than the peak they reached in September 2021, at a staggering $10,377. They are still about 10% higher than the average rates we saw in 2019 before the pandemic struck. Those pre-pandemic rates were around $1,420. Stay tuned to furniture industry news from FurniturePodcast.com to stay informed on the latest updates in the furniture industry, and make sure to subscribe for future episodes.